This trade was very simple because it was a high probability trade, meaning that the chances of reaching the target were extremely high and the chances of hitting the stop loss were very low. And this is the type of setup that I like to take because it's the only way to consistently grow a trading account. Focus on the best opportunities. Let's now jump back to the beginning of this trade and let me explain you why it had a high probability. So today I'm looking at the Euro US dollar on the 15 minutes time frame, and I'm using three indicators: the bottom stop signal, the RSI Exhaustion down here, and the levels and zones here as well. The levels and zones is the one that is making these horizontal support and resistance lines, and it's gonna be used as an extra confirmation in this case, while we will build the setup with the bottom stop signal and the RSI Exhaustion. If you're interested in these indicators and test them yourself, you find the link in the description as well. So let's get to the setup. As you can see here, we have the RSI, which is moving higher, and it's exhausted here and it's exhausted here. You see it's colored red and red, and at the same time we have the price, which is moving down. So we have the price moving down, the RSI moving up, which means that we have divergence, and divergence between the price and the RSI is the first rule that we look for in order to have a great opportunity. The second rule is to have exhaustion in the RSI, and as I just said, we have exhaustion here happening at the same time that we got this bottom here, and we have exhaustion also here at this very bottom here. So the second rule checked as well. The third rule and final rule is to have, of course, a bottom, and we have a bottom. It is just confirmed at the close of this candle, so you should always wait the close of the next candle for it to be an actual bottom, because if you see a bottom forming and its candle is still open, or so the next candle is still open, then it might disappear. So it depends on your trading strategy. If you are more on the risk side, you can trade the opportunity if you see it while the candles are still open, but you must be aware that the signal might disappear by the close of the candle. So you should always wait the close of the next candle, and at that point you can confidently say that that was an actual bottom. Then whether it is a great opportunity or a minor opportunity, or maybe even an opportunity that you should skip, then it depends on the overall setup, on the overall price action, and on the overall movement of the other indicators like the ones that we are using today. So back to the rules. Number one, divergence, and we have it. Number two, exhaustion, and we have it. Number three, a bottom, and we have it. So we can place the order. So the order looks like this. So we enter at this level here, and we set as a target. Well, we don't have any reference up here. We don't have any resistance. We don't have any previous price action, at least recently. So I will play safely, and I will confidently set my target to be this high. So around the same height of the previous highest point. So you see this week here, the candle went higher and then it retraced. So I can say confidently that if the price moves higher, then, as I am expecting, then it should reach at least this level here, and so form kind of a double top. So a top would be here and another top would be approximately here. As regards the stop loss, well, of course, we can use the levels and zones. So we have a bottom here, and the bottom is sitting on a very nice support. So we can say that the stop loss is going to be around this level here. So that it is below the support, just below the support, and actually also it's at the same level of the sell area. You see the red area here, it's shrinking, and it is pretty much at the same level of the current sell area. So this is the setup that we built. This is the analysis, and the expected return is about 2.x. So the risk reward is 2.45. It's not a very high return with this kind of setup. We usually get like 3x, 4x, maybe even 5x, and on rare occasions we go even beyond 5, like 7, 9x. So it's there are very rare occasions where you can go up to 10x, but you have to have very extra information from the price action and extra confirmation by this set of indicators to get that kind of return. They are rarer, but we of course we cannot get only those kind of trades, because maybe they happen like once in 2 or 4 months. So we just need to trade consistently when we see our setups, and this is a very likely winning trade, because we have all the rules fulfilled. And so we just need to be patient and see what the price decides to do. A quick update, guys. So the trade is running. Initially, it visited our stop loss area once and twice, but right now it's kind of a slight upward movement, kind of a sideways movement here going on, but the RSI is improving, it is increasing, so it means that the price should eventually move even higher and we should reach our target. Of course, this is not for granted, but on a technical point of view, it's all running good. So let's just keep an eye on this trade and see what happens. We have reached the target right now, so the trade is over for almost 2.5x return. The price actually decided to visit our entry level another time, so a third time. This is tough to most traders, especially beginners traders, because they look for a fast movement, and then the price keeps moving higher and then lower and then higher and then lower and kind of sideways for an extended period of time. And that is the time when most traders get emotional, so they start the trade pretty rational, and then they get emotional along as the trade evolves, and they end up making very bad decisions, like closing the trade, like moving the stop loss maybe lower, which is definitely to be avoided but extremely dangerous, but also maybe moving the stop loss to break even too early, and so they get they get stopped, the trade gets closed for a very tiny profit, and they end up losing money, because essentially if you get a small profit when you can get a bigger profit, you are essentially losing money. So you are not allowing yourself and your trading account to accumulate money, and this is something that many beginners traders do. It's a mistake, and I'm sure that if a trader is confident enough in his setup, he must learn how to develop rationality. So he must not get emotional during the trade, and he must not get frustrated if the trade gets longer than he expected. In this case, I'd say it's a pretty standard trade. It's also not a very big return, even though, I mean, a 2.5x return it's already great, because it means that we can even potentially lose the next 2.5 trades and still be profitable. So it's still a great return. But we know that with this kind of setups we can get even higher return. We usually get like 3, 4 or 5x returns, and on some other occasions, which are more rare, we get even higher returns. So guys, the trade is over. We got what we wanted, and I hope you enjoyed the video. If you did, make sure to like it and subscribe if you didn't already. If you have any question, as always, feel free to ask down below. I'll be happy to read all them and reply as well if I can. So I'll see you guys in the next video.